Wednesday, January 18th, market analysis, Stan Ehrlich, and boy, do we have a morning. We've got some major new sell signals. Exactly what I was hoping for, and I said so yesterday and probably the day or two before that. So this is it. Let's look at the stock market indexes. I usually start out with the S&P 500, which I will again. Now I'm forecasting that the market is in the process of bottoming out for a year or more during the next few weeks. That includes a decline, which I believe we started today and or yesterday, depending upon the index you look at. And that would be yesterday if you look at the DIA, the Dow Jones. But today, the S&P came up extremely close to yesterday's high, which was already a test of the major bear trend line, the sixth time that we hit that line. The last time is a very important price at 410.49, and that was on December 22nd, I believe. That's December 13th, sorry, when the SPY hit a high of 410.49. Closing above that would probably confirm the beginning of a long-term bull market, but I have other tools to use to help me confirm at lower prices that the long-term bull market has started. But before that, I'm expecting during the next 2 weeks a decline of another 25 points or so. We're already down 3 or 4 or down 4 points right now, 3.96 at 393.75 this second in the S&P. It is currently 9:50 a.m. California time. Yep. Now, we're much lower than yesterday's low in the spider, and we touched the low of the day before yesterday, which would have been Friday last week, which is a minor support area. And I drew a red line there. And that price is 393 and a few ticks. You can tell that back in November and December, the market held relatively well around a little higher, a little lower, that price level. So it is not an exact number, which I came up with occasionally because of different market features, but this is give or take a point or something. So 393 is the number to think about. Getting below 392, for example, would certainly be a point or more below the support area and probably drop the market off even more. Now, remember, there's a small gap to close a little under 391, and that could happen today. A small gap to close down there. Now, in the next 2 weeks, I am thinking that we're going to be coming down into the price range of approximately 366. This blue circle represents the time frame, which has started today, yesterday, and the price level, which we are nowhere near, that I think the market's going to bottom out inside that blue circle. Why? Because it would represent excellent timing and price level for the last shoulder low on a very large 8-month head and shoulder bottom, which started to form in June of last summer. The head of the formation is blatantly obvious, October 13th, a bullish engulfing green ER buy signal. And for those that you don't know, these red and green bars represent over 10 years worth of strategy work. And I've been doing this for a total of 52 years, since 1971, when I got into the business as a runner on the old Mercantile Exchange in Chicago on Franklin Street. It's not even there anymore. They've torn it down. Okay, that's the head of the head and shoulder bottom, October 13th. June was the first shoulder low, approximately. You measure the approximate time period from October 13th, the middle, into the future, and you get the last 2 weeks of January, we're starting, and about the first week of February. So during that approximate 3-week time frame, and at around the same price levels we could see, should see, history shows us that it's likely that we'll see a turning point from the bottom of a break to the beginning of a rally that'll break this big blue line, the neckline, and that's the breakout of the head and shoulder pattern. Now, I haven't measured the upside objective exactly yet, but I do know that it's in the ballpark of the historic highs in January of 2022, the top of the bull market after the COVID crash, and the beginning of this bear market. I think we are in the process of ending. All right, so down we go. Bearish engulfing almost. Overbought conditions, yes. Touching a major bear trend line, yes. In a little bit of an area of resistance that started November 11th until about December 15th. We're in that area of resistance in the last couple of days, yes. All of these reasons are reasons to believe that the market is about to turn down, and here it is. But I said all this stuff yesterday. So it's starting to come true, which is what we like. Let's look at the DIA. It was unable to get overbought. They came very close, not quite. Remember, this is not the original Wells Wilder's RSI. It is my custom variation of it. And I learned RSI from Wells himself when I was also a lecturer on the international circuit for about 150 lectures worldwide over a 30-year period, late 70s, 80s, and 90s, and a little bit into this millennia. Now, there is a potential head and shoulder bottom building also in the DIA. The pattern is upward slanted on the average. The head is a double bottom formation, not only October 13th, but also September 30th, with the two lows being extremely close to each other, and therefore a double bottom. Typically, shoulders and heads can be a pattern in themselves. The shoulder was a head and shoulder bottom on the left. It worked perfectly. The bottom was a double bottom. It worked perfectly. Now, I don't know what's going to happen yet in this decline, but there is a chance, very low chance, that it could develop another head and shoulder bottom. But I doubt that. It might be the first one I've seen of this size ever in half a century. So I doubt that that's going to happen, but there's also a chance. And that shoulder low would, of course, the first shoulder low would be December 19 and December 22. That's the shoulder. We're coming down to the head in the next 2 weeks, give or take a little. And then will another shoulder form later on in February? I don't know. It's unlikely. I simply want to get a low in about 2 or 3 weeks and start to head back north again. That would be fantastic. That's what I'm forecasting. That's what I'm here to do. Minimum upside objectives are challenging and or making new historic highs for this bull market from forever. Let's look at the QQQs. We have a bearish engulfing today. This is officially a new short sell signal. The last one we got, not that that's going to work as well as that one, was on August 16th of last year. The top of a bull move for months and the beginning of the move down to the October 13th key reversal bullish engulfing, ER buy signal. It turned green on October 13th. I'd love to see a green buy signal around the end of January or the first week of February. Then I'd scream bloody murder that we have a last shoulder low, a major buy signal, and we're on our way up for a year, I think. Past performance is not indicative of future results, and hypothetical returns have inherent limitations, blah, blah, blah. Classic government disclaimer, and I don't blame them. This is not cast in stone by any means. We didn't test the major bear trend line. We came kind of close on today's new rally high for the last couple of weeks, for a couple of months. But the fact that we've got a bearish engulfing. Now, it does need to stay below yesterday's closing price in order to stay red, in order for me to have that bearish engulfing, which seems very likely. But there is 2 hours and 2 minutes left of the trading day, 3 hours, excuse me. and 2 minutes left of the trading day. So there's plenty of time for things to reverse. Just because at the moment it's got a bearish engulfing does not mean it's going to stay that way. It could get better, but it could disappear also. Depends on how it closes. All the body parts are there if it stays where it is or rallies a little bit. And of course, if it goes lower, it's even better. So I think I'm on my way down. I've talked about this for days. It's finally coming true. And on top of that, I've got my sell signal. Yay. Now, the NASDAQ futures, the NQ, don't quite yet have a low, extremely close, but not quite yet, lower than yesterday's low. It's got the higher high. It's got the overbought condition. Again, that's not their standard RSI overbought of 70. It's different. And I don't calculate it the same either. So when we get overbought, we turn the daily bars yellow, and the yellow for 1 minute. And that is a warning that the market is likely to turn up or down. Up if it's oversold. And of course, in this case, it was overbought on a rally. So we're going to turn down, which we seem to have started to do. Bearish engulfing QQQ, highly likely, but not yet, to be a new bearish engulfing on the NQ NASDAQ futures. Bearish engulfing in the Russell 2000 and a whopper of a bearish engulfing. So almost an outside down day on the spider. It just didn't quite get above the high of yesterday, came so close. So it didn't turn red, unfortunately, but almost everything was there. 99% of what I wanted was there. And the DIA just gave up the ghost. Didn't get close to yesterday's high, anywhere near it, and then just dropped like a rock. The DIA is the lowest low for 5 days already. Okay, this is going to also probably create a lot of reversals in the sector section, which I will show you today because it's going to be a long recording. Let's go look at futures contracts. But first, I need to show you some of my signals in the ER trading system. We have a slight loss on SHEL. We sold short early this morning, but have a loss because it got up to our stop order and stopped us out at the high of the rally. Very unfortunate, too bad. We only lost like 20 cents or something. It was very little. If we hadn't got stopped out, look at the size of the decline. It's a gigantic brand new sell signal in itself, and therefore we'll try to sell it short again tomorrow. And if we hadn't gotten stopped out of the first sell signal yesterday, and these are back-to-back sell signals, which is fairly rare. But if we hadn't gotten stopped out of yesterday's signal, we'd have about a $2.50, $1.50 profit on a $60 stock. It would have been pretty damn good, but unfortunately, small loss. Next chart real quick. Yesterday, we sold short, not too far from the rally high. It didn't do anything yesterday of any significance. And today, slam dunk, we're doing very well. $1.14 on a $65 stock in 2 days. At the moment, profit. We haven't taken the profit yet. It's an open equity profit. We have a very small loss on a new long on this particular stock, AXNX. Next, sold short this morning. Have a small profit on this one, 24 cents. CCK, next. We bought this a few days ago and got out of the long position this morning on DDOG, DDOG, and it was a darn good trade. How much did we make on this? In 3 days, $5.02. Next, we have an unable. We came so close twice this morning to hitting our target in order to trigger, in order to go short, which was at 55.76. But if it doesn't touch it, the system won't make a trade. It's mathematical. There's no, I got close and I made the trade routine. It's only if it hit it that you make the trade. So the idea was right, and the price was just a little bit too high for the new short. Next, OKE sold short very early, relatively close to the high of the day. And we are down $1.72 profit at the moment, near low and last, and we sold near the high. And that was yesterday morning. Sorry, not this morning. And this morning we get more. Oh no, I'm correct. It was this morning. Yeah, this is doing just fine. I mistook the cursor line for the daily close line. Unable on this one. New short this morning, almost the rally high, doing great. $1.03 on a $67 stock today, period. And you can see our yellow stop, that's our STS smart trailing stop, has come down already this morning enough in some cases, not every one of them, to protect a profit. But you got to let it have some elbow room in order to milk more profitability out of the trade if you can. So in this particular instance, we're not super close to the current quotes, about almost exactly $1 away. In fact, I can tell you it's 98 cents away. We have a little label that gives you that information in the bottom left-hand corner. It's 99 cents away, basis the last tick. Now it's exactly $1 away. Okay, and if it gets hit, we'll lose 3 cents. Make 3 cents. Next, good trade so far. Not particularly aggressive on making any money. We're up $1.10 in 4 days. Next, CVS. We're losing money on this one. We're losing $1.09. Our stop is going to lose $1.36 if it gets hit, and that'll be at 88.50. If you choose to believe that it's going to be a good signal in the end, this is where you would consider buying it, because if you do get stopped out, you'll only lose 27 cents, according to where the stop is at the moment. But if you wait, well, that's a different story completely. Next chart, HAS, great trade. 2 days ago, got short. STS is starting to drop down now, protective stop, and it's making $1.08. X for U.S. Steel, small profit, only 6 cents, got short this morning. Nothing major. It's only a $28 stock. Next. We sold short this morning, very, very close to the rally high, which very unfortunately hit our trailing stop. Didn't have time to do any trailing. We lost money in about, I don't know, it looks like 5 minutes. But the system stopped us out with a very small, I think it's 20-cent loss. If we had not gotten stopped out, this would have been a great trade. And I think we saw this one already, Shell. Now I've got to stop showing you the ER trading system. ER3 trading system. Let's go to the futures charts. All right. Gold. Start out with gold. Got overbought. Talked to you about that late last week. Closed lower yesterday. At the high, it was still overbought. But today, we're starting to get out of the overbought conditions, and we're down a little. So the short-term downside correction is still in progress. I'd be looking for something in the neighborhood of 1823, and then for it to turn back up again. I like the looks of this overall, but we got too high, too fast, too quick, and needed to have a little bit more correction. Next, platinum. You saw it. We had a sell signal last week. It's the top of the market so far. We have a new low and a new low close probably today since that sell signal, which included the high of the rally. What can I say? This is exactly what I built the trading system for. It's working great so far. Now, I'm not sure, but I think there's a good chance we could challenge below 1,000, say 990 area, 980 maybe. Next chart. Silver. No signals, just kind of rolling over. Didn't even get very overbought. Just kind of flattened out. Trend is up. We could work a little bit lower, but I would be inclined to look for a buy signal here and not go short. Next, corn. Overbought yesterday for the first time in a few weeks, and now a higher high and a lower close potentially creates a minor reversal, but it's not an Ehrlich reversal, Ehrlich reversal, sell signal. But I do expect a little bit more of downside correction. These last two rallies in the last few weeks have been into an area of resistance, and that seems to be stopping the strength. And I do think there's a good chance we can come down to about 650, below 655. Next, cocoa. Same kind of comments. Chart is bullish, but the market looks like it has a little bit more correction before it starts to go back up again on cocoa. Next, Bean oil. We caught the bottom of the break. I told you about that at the time it happened, the day that it happens. I try to call market turns the day they happen, and I try to tell you that they could happen in the very near future before they happen because of my yellow overbought conditions and other chart formations and technical analysis techniques in general. So here I have to be pretty neutral, period. No particular great opinion. Next, live cattle, friendly. That's about the best I can say. A little bit bullish. Natural gas, you can't help it. You got to be bearish, but we probably went down too much too quick in the last week or two. And I would not be surprised to see all of a sudden a rally back up above 4.0 and maybe in the high fours around 5.0. But the trend is down. And during the next few weeks or a month or two, I think we're going to see lower levels. Today is the lowest low for the whole trend down. And we are close to being oversold. So be careful about any shorts. I wouldn't be inclined to go short at this point. And I would be looking, frankly, for maybe a buy signal for a little bit of a rally that would be decent. Next. Overbought for now over a week. I know it's frustrating to sit here and watch it go straight up and have previously bullish breakouts that forecasted higher levels. But the problem is, at any moment, you could see a big downside reversal. We haven't got it. It has a new high for the trend again, but I just got to wait. And that's the way it is. I'm looking for a sell signal. I'm looking for a correction down to a little bit below 4.0. Next chart. Wheat, slowly bearish. Not looking for too much more than slowly down. Next, live hogs, hit support, still at support. I know it's a new low and a new low close by a little bit, not a heck of a lot for the new low. The new low close is pretty damn decent. I think we're about to turn back up again for a small rally, maybe 90, 91.2. But the trend seems to be leaning in the slightly bearish direction, pretty much a big long-term sideways, nothing. Next, coffee. Downtrend, new lows, got oversold a few days ago. So here's the rally I was looking for. It might carry up a little bit more, probably not too much, maybe above 160 slightly, but I'm looking for sell signals. Next, OJ, head and shoulder top maybe. Spike high 2 days ago. That's the last shoulder high. Formation started in very early November. So keep an eye on this. Could have a good formation trade in the next week or two. Next, soybeans. Almost a bearish engulfing today. And if it does have an outside down day, which it not quite, it will turn red. We will get a major sell signal. It's not very far from it. But you got to get below yesterday's low. That does the trick. Right now, all I can say is at the high of today, we were in overbought territory, and that is a warning right there, 15, 48, 47, 46, 45, whatever, that we would maybe roll over and start coming down, which it did right away early this morning. It might have taken another day or two more, but it happened right away. So I'm a little bit bearish. The more obvious situations, the trend is higher. Longer term bullish, short term looking for a little bit more downside correction. Next, heating oil, neutral. Next, E-mini. Obviously the same commentary I gave you on the spider this morning and the other stock market indexes, looking for lower levels for the next couple of weeks on the E-mini. But for those of you that are long-term investors, during the next few weeks, I would be researching what you would be interested in doing for investment purposes on the long side, because we could develop that gigantic formation. 8th month head and shoulder bottom is not small. Now I've seen them bigger, but on a 1 to 10 scale, this is going to be a 7, maybe an 8. It's pretty darn big if it works. We're not finished forming the last shoulder yet. Next, so sugar, head and shoulder top maybe. Neckline is almost flat, but downward slanted a little bit across the low in late November and across the low made 2 weeks ago. The last shoulder could have happened today. We got a higher high for several days and a significantly lower quotes at the moment. And we could end up with a bearish engulfing, but it looks like it didn't quite happen yet. And it will not be a bearish engulfing ER sell signal because we didn't get overbought. Nevertheless, a bearish engulfing is supposed to be bearish all by itself without the extra perks. Next, test of resistance. Stop the rally so far on bonds, but a very big rally, up quite a bit. Looks like a couple points. And this is helping. Well, actually, yeah, that's not right. Okay, so no comment except that I've been talking about bonds making a large bottom formation of some sort for the last several weeks, a couple months. I don't think we're going to get carried away and start going straight up to 36, 40, 48 or something like that. I think we have one more downside correction into the low 20s, 120s first, and then up. Next, 10-year notes, same commentary. Now, I know this is a new high and a new high close since early September, but we're close to being overbought. So I don't think it's going to have many legs here. I don't think it's going to run up that much more. And it's coming up to a rather substantial resistance area. So maybe a little bit more strength and then downside correction. Next, crude oil. Trend is down, overbought today, and slightly lower than previous day's close at the moment. I think we have a rally high. It's in a general area of resistance and got overbought. I wouldn't be surprised if we're starting to head back down below 70 again. Next, soybean meal. Almost the same commentary, but didn't get overbought. Looking for a small correction, but the trend is up. Next, gold, and we started out with gold. I'll let it go here at gold. And now I'm going to show you the sector sections because with the reversals that we're having in the stock market indexes, you know that we're going to have some very big activity and maybe some major sell signals in the sectors. Now, this sector XLP, I don't care what it does or what sector it is, new low for the trend, and it looks like it's a downside breakout, and I'm expecting lower levels. Next, whoops, I got to get an X a different way here. IYE has a bearish engulfing sell signal today, and it's in a resistance area. Kind of looks a lot like the S&P, frankly, or the QQQs, and I would expect it to head south. Looks like it's the energy sector. SMH, almost a bearish engulfing. It is overbought. I expect it to turn down. Next, bearish engulfing red. Hey, another one. So I'm looking, this is a new short sale signal in this sector. It happens to be a Select Technical Spider Fund. So I've got a new short sale signal, the first one since the low on October 13th. Next, another new short sell signal in this sector, consumer discretionaries. The symbol was XLY, looking for lower levels, probably well under 130. Next, XLF. Not a sell signal, but it was overbought for a few days, so no surprise for seeing a break. Next, new lows for a few days, double top overall, probably looking for more of a downside correction. Next, XOP, bearish engulfing, official ER sell signal, looking for a test of prices below 130. Next, no comment. Bearish engulfing on the next one, OIH, which is the oil services industry, and Tierra del Fuego heading south. Bearish engulfing. We got another bearish engulfing not too long ago that caused a very nice downside correction for a couple of months, or a month at least. This one could do the same damn thing. It could even be more significant because it's at a higher level. So I'm bearish on OIH. How about XLB? New lows for a couple of days, got overbought. Broader double top formation, but no signals. Looking for lower levels. Next, XLV, which is the healthcare spider. Almost a new low for the trend. No sell signals here, unfortunately. Just turned around and started to head south. Next, bearish engulfing ER sell signal in this XLE index, which is the energy spider fund. And it looks like a good one in a resistance area. Expecting a test of 83. Let's see how far down it could go. I would not be a damn bit surprised to see this break below 380. I'm at 80, not 380. 80 flat, and it obviously tests 83 in general. Next, XLU starting to break down. The top of the market represents yellow, which is overbought. Didn't get a sell signal, unfortunately. Next, at resistance, got overbought, starting to break down, looking for lower levels in almost every one of these sectors. No surprise with the market indexes showing me all this sell signal activity. Next, could have a bearish engulfing here, and not quite yet, but close. It's overbought for the last 5 days. Yep, and substantially overbought. This looks like it's going to turn out to be a new short sale signal, but it's not quite there yet. But it looks like it's got 99% of the body parts. Next. XBE, breaking down, neutral. Next. Bearish engulfing again on VNQ. That's a lot of bearish engulfings we're seeing, and I'm not surprised. We saw a heck of a lot on October 13th with that fabulous bullish engulfing buy signal for the October lows, which is a seasonal tendency trade, and it happened beautifully this last October. And I talked about it a month or two in advance. So this is heading south. Next, another new bearish engulfing sell signal. This one happens to be an XHB. Down we go. Next, another one, XRT. Man alive, we're getting a lot of them today. That's got to tell you something. Now, I'm going to repeat myself, of course, because there's some crazy people out there that think just because I say something, it's going to come true. Not true. Past performance is not indicative of future results, and hypothetical returns have some inherent limitations. But these look like good signals. I've got to say that. Next. And we're almost finished. This is the last one, XME, another bearish engulfing sell signal. What can I say except a lot of bearish activity today, and we might have even a lot more before the close. The lower she goes, the more sell signals I'm going to get by the end of the day, and we are almost low and last on the S&P 500, almost low and last on the DIA, as well as the QQQ, and the Russell 2000. So we have, just a moment, broken that modest, I said, area of support, which is around 393 on the spider. On the daily data chart, it did not hold, and I thought it might not because it's not that big a deal. The next one is a gap closure I was talking about, and it's small, around 390 and a half, a little lower than 391, and it could very well be reached today. Now we're down 5 points. So if we drop another point or two, it would not surprise me a darn bit. And we're on our way down. This is a new low now for at least the 2 previous days, and maybe a little bit lower is going to be a new low for 3 days, and lower by another minor amount is a new low for 4 days. And it all could happen before the close relatively easily because we're not very far away from it. Well, that's it, ladies and gents. Tune in tomorrow to see how this happens. And keep listening, because this is a formation, if it comes true, that is my favorite technical analysis formation, a head and shoulder, that is in the latter stages of forming. If I am correct, if I'm correct, it is the beginning of the bull market for 2023. You have a great day. Profitable trading to you.